Hi guys, welcome back to another video. Today I will be breaking down all of the trades that fit my edge this week that's just passed us. I didn't catch all of them, as you know, it's not necessarily feasible to catch every single trade that your edge provides, but we caught a few of them. And I'll just let you guys know on some of the improvements maybe I could have made moving forward, as of course it's always good to review your performance and see what improvements you could have made, etc., etc., etc. So we'll be going over GBP USD, NZD USD, and Euro USD. So we'll start with GU. This delineates our start of the week, and this delineates our end of the week. So these two lines, as you can see, we have Monday and then Friday close up here. So starting with GU on Monday, we had two opportunities to get into trades. I will just delete these. So what was I looking at on Monday? Well, first of all, I noticed that we had a large sell-off, sort of enticing sellers into the market. And then we eventually took out this swing high. So we broke bearish and then broke bullish again. So I was initially looking to trade somewhere between this low and this high. And if I mark on my range, as I always trade from very specific points within the range, I noticed that we had this buy to sell range located within the lower 30% of the swing range. And we tapped in during London kill zone. We have London open, which is here, right through to London lull. I'll mark this on as London kill zone. And we have New York kill zone, which is here until around about here. So we actually took this position in my Discord, which, by the way, is free. The link will be in the description if you do want to join. Come and say hello. We are a friendly bunch, and there's a load of great traders in there. So if you're looking to learn, it's absolutely free. I share all the trades I'm taking. I share my analysis, my key levels, and stuff like that. So yeah, come and say hello. Now, in London, we tapped in. And if I just zoom in here, make it a little bit easier to see, I originally thought that we were going to pull down to around about here, a little bit lower down, which is also the open of the bearish order block here, opposed to the whole candle. However, we decided to not tap any lower, and we just tapped the high. So after I saw the bearish rejection candlestick here, I told the guys to take a buy, and we covered this with about a 9 pip stop loss. So we had about a 9 pip stop loss on this trade, and initially it was running well. We had a nice little impulse, and then we started to come down, and we dropped these equal lows right before New York session, and then we pulled back up. So I told the guys to get out at break even. Actually, it was like a 0.1, 0.2% loss, but that's fine. It's better than a full loss, because I believed that price was going to come deeper into this area, potentially into the open, and then we were going to hunt for another setup. Now, I wasn't wrong in my presumption. We did come below these lows. However, it was only by about half a pip. So we were out of the trade, which is just probabilities. It could have well have wicked much further down, and then we could have taken the entry again. However, we were out for break even on this trade, and we missed out on a nice 5R win. But according to my rules, according to my plan, it should have been a nice winner, and I should have just accepted the loss. But yeah, that's by the by. On to the next one. So obviously then in New York session, you see we run these equal lows here, and we give another nice rejection candlestick, pulling up, and we close above the opening price of these two previous bearish candles, giving us that change in state of delivery on the 15-minute time frame. So I'll just write this on, CSD. So we get a change in state of delivery out of the higher time frame point of interest that we're looking to trade from. So reasonably speaking, we should be confident that this low will now hold after we've just taken liquidity during a kill zone. So we could have had another entry here, just covering the low, something like this, and targeting the Asia highs, or if you wanted to hold for a swing trade a little bit longer, for the swing high for around about 6R. Yeah, so that is Monday. Very, very simple, very, very easy to see, very repeatable process over and over again. Now, moving on to this trade. This is the only other valid trade on GU. Oh no, we had another one. This was a loss though. This was the next valid trade on GU this week. You can see we had a minor run on liquidity on this swing low here. And then again, we broke out to the upside. So it's like we have run on the high, run on the low, run on the high. So we can reasonably assume that this low will hold, at least for the short term, and we have some sell side liquidity to take here for some inducement. I didn't take this trade. This was rather late in the day. I was already asleep. This is around about 2 a.m. my time. But you know, you could have got into a trade after we had this lovely bullish close from the lower 30% of this swing range and comfortably covered this candle low, which this trade peaked at 3.5R. I would probably have taken a loss there. I like to take around about 5R. You could have covered the swing low, the candle bodies, you know, with an 8 pip stop loss, and you would have got 5R. It depends how you would have managed this trade and got into the trade. Yeah, but that was basically the other one. See how simple this process is? You're just waiting for a run on liquidity and a break in structure and a return back to an order block or point of interest that is located within the lower third of the swing range. We have a run on a high, we have a run on a low, and then we have a break structure with clear displacement to the upside, leaving us with this swing low. And, you know, just for argument's sake, we also run this low here by around about a pip. So we can, like I said, reasonably assume that this low is going to hold, at least for the short term, for us to take some money out of the market. And then we took this low. So then I was, you know, waiting for maybe a pullback up to here, which we never got. And then on Friday on GU, we had this price action here. And as you can see, we had this lovely clean bearish order block here. Oh, that's not a kill zone, that's a point of interest, which, yes, it was violated by, again, around about 1.3 pips. It was super clean. I would take this trade over and over and over again. Why? Because you see we have a low taken, and then we run the high, and then we run the low again. So it's like low, high, low, which gives us the swing range that we can work with. And the point of interest is located within the top third. So I told the guys to set a limit on this with around about a 10 pip stop loss. And we were looking to target these equal lows here, which was about 50 pips, which would have given us the 5R. But yeah, it took us out. It is what it is. Actually, we had a 12 pip stop on this because we covered this high. Yeah, it was like that because we only got taken out by around about a pip. Yeah, but yeah, it's what it is. So that was GU recap for this week. Now we can move on to New Zealand. New Zealand dollar only gave me one setup on, or my edge only presented once this week, which is absolutely fine. This was on Wednesday in the New York session. You can see we have this structure. We take the high, which denotes this is our swing low. We then give a break in structure, that we then pull back, we run liquidity, and then we break structure again here, giving us that low, high, low that we can then trade from. And then we also leave a nice set of clean stacked highs here for buy side liquidity for us to then pair our short position with. Now, let me zoom in here. My point of interest was obviously this. However, I refined it just a little bit, sort of something like this. And initially we had this 15M rejection candlestick, and I told the guys to take a sell here with a 6 pip stop loss, which covered that rejection high. I've got, loads of data on this to suggest that it does work to just cover the rejection candlestick high. And we were taken out again by half a pip. So I should have told the guys to sell again when we saw this bearish candlestick form, but it was late in the day and I wasn't really feeling it this day. I didn't trade for 2 days, so I, was kind of a little bit slow this day. Had I done that, we would have had a win and we would have ended the week up because we would have closed out 5R around about these equal lows here. But yeah, it is what it is. We ended this week down 2%. Last week we made, or the previous week before last week, we ended the week at plus 10.5R. So, we're still up 8.5R in the past 2 weeks, which is absolutely phenomenal. And that's the only edge that was presented on NZD USD. I did also tell the guys to set the limit on here, but then I realized it was invalid because we have this small. We run the low, we run the high, we run the low. This high mitigates this previous run on liquidity. So we have a run on liquidity which mitigates a previous run on liquidity. So I don't trade off that because theoretically all of the money has moved. So we did initially have a limit set on here, but I told them to delete it, and lo and behold, sod's law, it worked, and we could have ended the week up, but I don't take invalid trades. I like to stick to my edge. So yeah, that is what it is. And yeah, now we can move on to euro dollar. We had 3 presentable edges on euro dollar this week. Again on Monday, which I didn't take these because it's set up coincidentally exactly the same time as GBP USD, exactly the same setup. And it was only Monday, so I didn't want to put down all that risk right on a Monday morning when I should have just said, F it, it's my edge, and taken it. But again, it is what it is. I've, managing money for people, so I need to be a little bit conservative in that respect. So we had this point of interest here. And again, it's literally the exact same setup as GU. You see, we have a large displacement to the downside, which then fails. So we have a failure to displace, and then the high goes. So we have a high, a low, and then the high again. And if I just denote the range, which our current swing range would be this to this, we had this, and again, we have this lovely point of interest, which is located within the lower third of the range. Now let me just denote on our kill zones again, which we have London kill zone here till around about here. London kill zone and New York kill zone, which is going to be here to around about here. So during London kill zone, you see we tap into our point of interest. Again, I selected this whole range. This whole range here is a sell to buy, which ends up breaking structure. So it is, more than valid to use this whole range. But sometimes you will see price trade down to the open of the down close candle. And then we tap in London, and we give a lovely displacement to the upside after taking out multiple forms of sell side liquidity. And we also leave this lovely 15M order block here. So we could have taken a buy straight off this here and just had around about a 10 pip stop. Even, smaller would have kept us safe here, and targeted at minimum those Asia highs, which would have given us, a 6R. And then in New York kill zone, we do return to that same order block, running sell side liquidity that was formed during the interim period between the end of London kill zone and the start of New York kill zone. You see we form a little short-term, intermediate-term low. We then run this low. We do not close below that. You see the candles are respecting, the candle bodies are respecting this low. And then obviously again, we give that change in state of delivery here on the 15-minute time frame. we close above the opening price of the last down close candle. So we could have taken a buy around about here with again a stop loss covering the low and our target either Asia high or the swing high for between 7 and 5R. So yeah, I hope this all makes sense. If it doesn't, drop me a sub on the channel, ask me some questions in the comments, or you can join my Discord. Like I said, it's absolutely free. So come in there and ask some questions. I want to help you guys learn. So yeah, what you got nothing to lose basically. You're not paying any money, so come and talk to me. I'm trying to build a community of elite traders. Okay, and then on Friday we had the last edge that presented, which as you can see here, we have low, high, low. Okay, so this denotes our swing range. So we can then draw on our swing range, and if we also denote our New York kill zone, which would be here to roughly here, you can see price returns to a lovely doji candle, which is contained within the top third of the range. So we could have taken a short position here, just covering this order block, or failing that, we could have even set a limit on here, which gave us about an 8 pip stop loss and take profit at 5R there, which would have given us a lovely close on the week. And we could have potentially ended the week at +3 instead of down 2, but it is what it is. This is what I'm doing this review for. Why didn't I take this Euro trade? It came late on a Friday evening. I was with the missus. We were watching a movie, so it's part of the game. But if all went according to plan, I should have been +5. This I probably wouldn't count because of the time that it came, but it's still valid trade to take other than the timing. So I should be +5 -1, so that would be +4. And then +5 again on this New Zealand trade. So that should be +9 plus a euro. I should be about +14, potentially +13 if I count a loss and then a re-entry. But yeah, it is what it is. I'm going to come back stronger next week. So get into the community. I'll be sharing the trades that we take with you next time. And yeah, I hope to see you in there. Peace and love, guys.